The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. This is our show from in the middle of the night in Hong Kong, China. And I'm overlooking the South China Sea right now. And one of the most beautiful sights you'll ever see from a city is the lights at night of Hong Kong. I mean, it is really spectacular. The beautiful hotels that light up, and then with all the Christmas decorations, this is really a festive time of the year here. Even though it's not a Christian nation, they practice all of the Christian things, and Christmas is really big here. Here in the hotel, the Christmas tree is so high you just can't believe it. And with all the little kids running around, it reminds me of FAO Schwartz in New York. It's really quite spectacular. Those of you that have not traveled here before, they have some of the most elegant shopping you'll ever find on this planet. And the thing that's interesting is that the people from mainland China coming in across the border, which they have to have papers just like we do when we travel abroad, they come in with their suitcases and they line up at all the stores that are selling the high-end merchandise like Louis Vuitton, Coach, and Dolce & Gabbana, and Fendi, and Prada. And they're in line, and they have to take a number, and then they go in and do their shopping, and then they pack it into their suitcases, and then go back to, usually through Hong Kong, and then into Guangzhou. They take a train and go back into China. But the crowds are not as big as they were last year, which is one thing. They're about one-third of the size of what they usually are. But it's been very interesting to see all the things that are going on here. The real estate is still high, but it's backed off a small amount recently because Hong Kong has made restrictions. There's a 15% surcharge from anyone from China coming in to buy a house. So if they're going to buy $1 million house, they have to pay $1,150,000 for it just to get it, and it's 40% down minimum. So they're not making it easy for people to do it, but prices are still strong because this is a very small island, and it makes it really difficult to get property unless you're well-heeled to get it. Okay, the first chart that I've posted into Tiger TV today is a chart showing the total volume on the New York Stock Exchange, and it's basically showing that the volume on the market has been declining for the past several years, and recently during this last run-up, the last 5 or 6 months, the volume has really started to slow down quite a bit. So this is, whether it's an indication of what's happening, I don't know. I still believe that all of these patterns that we're looking at they're just very, very ominous indeed. They haven't turned yet, but these are very long-term patterns. It might take another month or two, I don't know. But they certainly could. The new moon stopped it for just a couple of days, and then we've gone above that, being led by the NASDAQ, of course, being, Amazon and Google being the leaders of the pack in that group, so that's good. I understand that Tesla sold its first car through Bitcoin in Northern California the other day, which Bitcoin to me is a total, I've read all the things I can read on that just to try to understand it, and I must really be dense because I don't understand it. And I've talked to a couple of my friends and they feel the same way, so I don't know, but when stock goes from 1,000 to 600 in a matter of a few hours, there's probably something wrong with the liquidity of it. I don't even know what exchange it's traded on, if it is exchange traded or not. It might be on the pink sheets. I'm not sure. All I know is, boy, they sure get a lot of free advertising. Here in Hong Kong, we're hearing how China has stopped the use of Bitcoin in China. So whether that has any bearing on what happens, I'm not even sure. But the idea sounds pretty good. It's just I don't understand the mechanisms of how the thing might actually work. So that's it. Now the next chart that I would like to share with you folks today is a chart from the similar to the one that we're looking at here with the volume, but this is the basically it's the trend, and it's basically shows you it's actually the advanced decline line of how markets are going up with the there's more. Just give me a second here. There we go. This shows that there's been, in the last 6 or 7 weeks, starting in late October, you can see that we stopped making more new highs and new lows, and it's actually gone into a really tight trading range here in the advanced declines. In fact, if it weren't for Friday's, big up move, on the non-farm payrolls, this thing would probably be taking out the lows of November. And whether that means anything or not, I don't know, because everybody keeps telling me that it's different this time, and I really believe it's different this time. But the difference is the fact that I think it's actually worse this time. And I could be totally wrong, and I am quite a bit. But we'll see if down the road what's going to happen here. But unless Isaac Newton's law of motion is going to be, for what goes up must come down, unless that's going to be repealed. We might have a 1% correction sometime in the stock market. Who knows? But these markets look extremely bearish to me. They don't look any better than they did last week. The one day that we had, got everybody, bullish again, I guess, and we've already got close to 60% bulls and less than 15% bears. That's only happened 4 times in the last 15 years. And every time we've had that, there's been a very, very severe correction. We also have margin debt equal to what it was or worse than 1929. So that's the thing that we're looking at when we're, watching these particular markets. Frankly, when some of my colleagues, and I respect all of them, and when some of my colleagues, tell me that I am wrong this time, I have to listen to that, but I have to look at the charts. This is the thing that got me to the dance, and I watch this, and I look at all these things, and, I know it's going up a little each day, and sometimes it goes crazy like it did on Friday, but frankly, that's, in the long term, that's not a good thing when markets are topping, and this certainly looks like a market that is ready to roll over, from this level. It hasn't rolled over as yet, but when you start to see volume start to drift off, you got to ask yourself, who's doing all this buying up here? And maybe it is some short covering, we don't know, but you have stocks like Google and Amazon and, and now Apple. Those have all had, pretty good runs. Apple's up near the, major 61% retracement up here at $570 per share. So whether that means much or not, I'm not quite sure. Someone asked me a question, what time is it here in Hong Kong? And it is 1:15 in the morning on the 10th of December. And so we are a day ahead of everybody. And it's really unusual because the market here opens at 9:30 at night. The S&P opens. So it makes for a very long night if you're going to stay up and trade through the night, which I do not do, when I'm here. We had a seminar tonight with a really nice group of people, and it was a lot of fun. We did some live trading and talked a little bit about the markets, and it was very, very interesting. They're quite receptive to technical analysis here, and it's a great place to come and visit if you get a chance. In fact, it's so inexpensive here compared to other big cities of the world. It is truly amazing. You can get a really nice meal for $10 or $15 at a nice restaurant. You can go a lot higher, of course. You can go up to 100 and even more, but you can get some really nice places to eat. And transportation is so cheap, you can't believe it. To take a taxi to the other side of, to go to Kowloon, which is on the peninsula, which you have to go through the tunnel under the South China Sea, that only runs around $8 or $9 to, get to the other side of the island. If you were to do that in London, you'd be looking at $100 minimum. In New York, it'd be a lot cheaper, but it's still very, 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 very cheap. And then they have the MTA in the tunnel where you could actually just actually get on the, the train underneath the city and go underneath the South China Sea, and you can do that for about I think it's $1 or $2 Hong Kong, and that's not very much. That's only about I think it's about $1.50 US, as I recall. But it's very interesting, the different things here. The thing that's expensive here is if you want to own a home. You just better bring a big sack full of money because to buy a home here, is really really quite amazing to see the thing. It's called the MTR, the Mass Transit Railway. I'm thinking of the MTA is the one in Boston. By the way, I wanted to. I'm going to come up here to a break pretty soon, but I have to get into something that I really going to see what's happening with one of the things that Tom's been talking about, and that's the gold market. And if you remember back about it's about a year and a half ago when he was talking about King Dollar, when the euro or the yen was down around 75, 76 versus the dollar. It's now at 103. Tom was incredibly bullish that market, as was I, and I thought it was going to have a pretty good move, and it has. It's continued the move, and it looks like it might even go higher. We don't know if the breakout here above 104 is going to be real. We'll have to wait and see if that's going to be the case. But it's starting to look at it. But if you look at this market, like what he was looking at with the dollar, and now he's talking about gold, I spent a great deal of time this weekend preparing for the seminar tonight, and because the folks here, they love to trade the yellow metal like you cannot believe. And so what we're going to be looking at here when we come back from the break is what the gold market is doing, and it's got some really unique timing sequences that are coming up that fit very nicely with the FOMC meeting that comes in next Monday and Tuesday, the 17th and 18th of December, and that will be very, very interesting to do. Now, realize the stock market is up more than 26% in a year, and to have back-to-back years of gains like that is really an outlier event. You'd have to go back into the 40s and 50s to find out, how the market went up that much. And remember, we were just coming back from World War II during that time, so we have a full-blown economy now, and the figures that they give us on unemployment and stuff is really quite amazing. The most amazing thing I thought was the fact that there were 23,000 new jobs more than last month, 180,000 last month, 203 this month, and yet the stock market's up, almost 2% in one time, and the unemployment rate goes from 7.3 to 7%. Well, the only way that happens is if people drop out of the workforce, but they don't count that anymore. But the numbers that count are the ones that we have to work with. So these are the things that we're looking at. But the main thing that we want to be doing now is we want to be getting ready. When we come back from the break, I want to be able to look at what's happening, with the gold and silver. So that's the main thing. We've got the Dow up 16 points. The New York Composite's up about 7. The S&P's up 4, and the Nasdaq's up about 15.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to show the next chart that I wanted to talk about before we get into the gold. I want to spend more time on the gold than allows us before we have the small break here. But what I'd like to do is to show the monthly chart of the IWM, which is your small cap, your Russell small cap, and we'll take a look at it. And if you just take a look at the 2 patterns that I have there related to time, these are the triangles that show the time up in the move, where the AB leg is equal to the CD leg, and you can see where we are now at the 112 area in the IWM monthly. But what I would like for you to do is to go over to the left of the chart and look what happened during 2005 to 2007. You'll notice at that time there was a huge move, and that was the top of the market in 2007, where it dropped well over 2/3 of its value. We're looking at the same pattern right now, only it's much larger. These are the patterns that I'm looking at in the Dow Jones and the NASDAQ and the S&P 500 with these expanding triangles, and we'll see that that is what's happening. So this is one of the reasons why I'm so nervous in here from the long side. In fact, I can't see any reason to be a buyer of stock, so that in itself probably ought to be one of the reasons if possible. Maybe I'm the lone bear out there, and we'll see if they come in the cave to try to get me. We'll have to wait and see if down the road that's going to be it. But frankly, it doesn't look much different to me than it did in 2005 or 2007, except that it does look a lot worse because the move has been much greater, and when moves go up, they have a tendency to give a great deal of it back, and that's the bigger the thing. You know, there's an old adage in boxing, you know, the harder they come, the harder they fall. And so that's the main thing that you want to remember. Now, the one that I wanted to bring up here to show you folks, if you give me just 1 second here, is the Dow Jones Industrial Average on the monthly chart, and that basically shows that we're doing this industrial the 1, 2, 3, 4, 5 expanding triangle, and we are also completing a major ABCD from 2009 that we talked about. There is a potential, however, that we could get up to 17,400 in the Dow, and I have to figure that in, because even though all of the other indices are within the realm of the target, there's a possibility that the Dow has that expansion looking at it. The ABCD patterns have all been made and everything, and when I look at the declining volume, and I look at the advanced decline line, and I look at the margin debt, to me it really is scary, and maybe it is different this time. If it is, then I'll have to figure out what I did wrong looking at this. But boy, when you have so many things lined up, it's really difficult to try to get on the bullish side when you see all these warning signs that that I see. I wish I'd have had these warning signs back in 1973 or 1974, but it would just been another lesson that I would have learned another way to take a look at what's happening with these markets. There is one other market that or one other stock chart that I think that is really necessary to look at, and that is the if you'll give me 1 second here, I have to get it technically hooked up here, and then we will be fine. And that is the VIX index, because we did have a slight move in the VIX index. It looked like there was going to be a move of some kind, but what happened was it only lasted about 3 or 4 days, 4 days to be exact, and then we're pulling back. And I believe this pullback is the one that's going to be important at around the $13 dollar level per share in the VIX index, because we're not seeing any fear in the market at all, and that in itself is another sign that you have to be rather vigilant of what is happening in the stock market, because I'm just not seeing the follow-through bullishness that you would think you would have. I know when the market's up like it was Friday, there's a lot of emotionalism behind that kind of stuff, but that's mainly because of the reaction to the report. And believe me, folks, the Bloomberg and CNBC and the BBC and CNN, they're all on the, in the spotlight over here, and it really is a big big promotion on the stocks that are going up. The Hang Seng is very unusual, because they take breaks of an hour 3 different times during the day where they literally stop trading and then reopen the market, which to me is ridiculous. Okay, folks, we'll be back. The Dow's up a little bit, NASDAQ's up a bit, S&P's up a bit.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex.
Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, the question is, should we replace our gold with Bitcoin? I'd hold off on that a bit, maybe wait just a little bit and, see what happens. We'll have to wait and see, what happens with this particular idea. I know that the Winklevoss brothers, the guys that were involved with our good friend Mark Zuckerberg, are involved with Bitcoin, so I don't know how that's going to work out, but they sure get in the news quite a bit. I just don't understand it. I've gone through a PowerPoint presentation a couple times trying to understand it, and it's really difficult. To me, it looks like it really be set up for some type of, scam or a hacking possibility. But I know much about computers as Mickey Mouse knows about Donald Duck. So who knows? Okay, let's get down to business, folks. I put a chart of gold, the daily chart of gold, on the TFNN, and I'd like for you to take a look at this because this is a very, very symmetrical chart. Gold is one of the most freely traded and one of the most technically accurate charts that you can possibly get, and you'll notice that we made a huge Gartley pattern back at $1,435 an ounce, way back in late August of this past year, and you'll notice the ABCD pattern that it completed going into that time. Well, on further examination of that pattern, you'll notice that the AB swing is exactly equal in both time and price to the CD swing. Now, if you believe in the premise that what's happened in the past is going to happen in the future, we're going to be looking here at gold making the same type of move on the downside. If you'll notice, from the August high at 1435, we came down to just around 1255. Then we rallied up to an exact 61% retracement up at 1358. And then we're coming down now. And if you look at those two triangles together, the first one went from late August until mid-October, and this one is going from late October into mid-December. The time and price of these are squared. In other words, the amount of dollars per cents coming down, or dollars per ounce coming down, was exactly equal in the AB leg as it was in the CD leg. And the timing of this tells us that we're going to be coming into the 17th or 18th of December. Well, that just happens to correspond with the full moon of December 18th. Plus, that is the day that we have the FOMC meeting of some kind, that they're going to be, talking about sequestration or whatever. I don't think it was sequestration. It was the QE3 or whatever, QE12, whatever it happens to be. They were going to be talking about that as far as something, really big happening. So what's interesting about this, folks, is I'm seeing it from one point of view, and Tom O'Brien, who I really care about a great deal and deeply respect the work that he's done, is seeing the same type of work from a different angle. And when you look at the XAU index, it's got the potential to go down about another 10% from here. Whether it's going to do that or not, remains to be seen. But it also is making that same type of pattern on the the long-term charts. And so these are things that I think you have to really sort of pay a great deal of respect to, because the gold-silver index has been going down for several years. I mean, it's not even had any backers at all, and it looks like we're getting ready to make one more push to the downside in the XAU, and then after that we would have a chance, for the market to have a pretty good rally. Now, the $64 question that someone just sent me a message on is, how does silver look? And we're going to take a look at that right now, because it has got the same type of pattern, but we're going to look at silver on a little longer term basis, because what's important about this is that silver is only about $1 or so away, $1 per ounce, or actually about $1.80 from the 786 retracement that will take us down to the 1760 level. And when we get there, we're going to be taking out the lows of the year that we made in June, and that's going to make everybody incredibly bearish gold. I mean, there are going to be so many people, even the bullish people are going to be bearish to gold, and that's the time where I think we have to look at a place to potentially get long this, because that's the main thing of what we're trying to do. So keep in mind that that's coming up on the 17th to 18th of December. It's going to be a big event, I believe, for gold, because the way that it's coming down is just so perfect so far, and it's setting up to make something look really, really interesting. And then we'll be watching silver. The two prices that I'm looking for is around $11.70 per ounce in the gold around December 17th, 18th. That's out about a week from today or tomorrow. And then in the silver, somewhere between $18 per ounce and $17.50 per ounce. If it's really good, it'll take out the lows of the June or July, and then it'll turn from that level. So it'll be a low-risk trading opportunity. But if it's right, the last time we had a rally in this, gold rallied over $150 an ounce in a matter of a few short weeks. And this, if it's the major bottom, could take gold potentially into new high ground, because long-term gold has been in a very long bull market going back to 2003, when it was trading at around $260 per ounce, and then we topped in August of 2 years ago at the August 2012 at the $1,932 per ounce level, and since that time we've backed off about $800 an ounce, not straight down, but ratchety like it usually does. And that tells us that there's been, some buying on the downside. But you're hearing stories now about, gold has lost its glitter, just like it did when it was $260 an ounce. Prices are going down. They're going to make excuses of why it's going down. And when prices are going up, no one really cares, because, fear is a greater emotion than greed. And when markets go down, they go down very, very fast, as we've seen in Bitcoin. And believe me, I have no idea what exchange that thing has traded at. Someone's asked me this question, and I really don't know. So that's the bottom line on Bitcoin. I think it's like the South Sea Island bubble. I mean, that's what it sounds like to me. But these tech people out here are so brilliant that you have to give them all the respect in the world for what they've done. It's really quite amazing to see the technology that we have out here. It's just really quite amazing. At lunch the other day, we happened to be eating at a very elegant Chinese restaurant owned by the gentleman who was our host, and little did we realize that he was very, very powerful here in Hong Kong and was known by quite a few people, but you've never known that he owned the restaurant itself. But while we were in the restaurant, there were all kinds of families having their Sunday dinners, and every child there, from 3 years all the way up to teenagers, had at least one electronic device, that they were going through, either texting or playing video games. I mean, everyone. I mean, it was not unbelievable to see all the technology that's out there. And I'm watching these young 4- and 5-year-olds texting, and I have never done a text, and probably won't in my lifetime, but one never knows. So we'll just see, what's going to happen. But the one thing we want to remember in all of this, and I'll try to keep chattering too much, is that the gold has got some really positive price and time things coming together around December 17th to 18th. It's so symmetrical on the way down, and believe me, bottoms are much easier to pick than tops are. Because tops are so emotional because of fear and greed. People with greed, they lose all consciousness of what's going on. Whereas they're in fear mode, it's a totally different ball game. So we have to really keep an eye on this gold around December 17th or 18th to see if it's getting ready to have a turnaround move. I mean, all the patterns are there. You've got the ABCD patterns. You've got the double bottoms patterns coming. You've got the 786 retracement in silver. And, oh, yes, one other thing I wanted to mention is that the low that we made in gold way back in June, late June, we came in at $1,177 per ounce. Well, we measured to $1,174 an ounce when we come into December 18th. Now, remember, folks, when we were looking at Apple, when it was trying to make its bottom, we had talked about Apple when it was around 580, that it was going to go down to the 385 to 390 level. And we were looking at that same ABCD with time and price coming together. We got very, very close. I think we were within about 6 or 7 days of that exact low. We had the price at 385. We were a little bit off on the timing of it, but the price hit it exactly, and then it's rallied just about $200 a share, since that pattern had formed. This is the same pattern that we're looking at, in the gold and the silver. But with the gold and silver, it's just it's so perfect. I mean, there's not a flaw in it. I mean, it might not work, but my goodness, it's got everything that you could possibly look at for a pattern. The good part about this is that most people do not do what we do. Whether that's a good thing or a bad thing, that's up for debate. That I don't know. But all I can tell you is that this is a very, very symmetrical pattern in gold and silver, where you've got time and price down perfectly. It just cannot be any clearer, than that. So that's the bottom line of what I'm trying to get my point across here. Someone asked me a question about Twitter, folks. I've never done a twit or I know some twits, but I've never done any twits, so I don't know anything about those things. I stay away from social media of all kinds, because I think the more information that people on the internet have about you, the worse off you are. And believe me, boy, there's some really sinister stuff that goes on the internet, and anybody that doesn't believe that is being very, very naive. They are they've got some really nasty things happening. So you just remember that when you're doing your social media. Be careful about what you put on there, because if it's on there, believe me, the government has access to it, either one way, or the other. In fact, there's a new movie out that talks about how these social networks were actually started by the U.S. government, and they actually get all the information that they need from there, and plus the tracking devices that they have, on the telephones and stuff like that with the GPS is really quite amazing also. So just keep that in mind. We have a new telephone in the family. It's a Galaxy S4, and it also has a GPS in it where you can actually, look at where you want to go, and it'll tell you where you want to go. So, it's amazing technology, folks. And here's from a guy who thought that color televisions were not going to make it. And look, I missed that one, and I missed microwave ovens. But the telephone's here to stay. I have to agree with that. I don't know if you folks know this or not, but during the Big Depression, telephones were relatively new back in the 30s, and during that time, American Telephone was one of the Dow stocks that went bankrupt, and it's really been, I think it's filed for bankruptcy at least once, maybe twice, and made it through. So that's the important thing, that it came out of it okay. But right in the middle of the Greatest Depression here, you had one of the strongest commercial products we've ever been introduced to, was the telephone, and yet the company didn't quite make it. Remember that plumbing and the things that we take for granted now were not available during the Great Depression, and that's where we come up with some of these things, where we usually are at that point. The price of these electronic things are down so much, it's really amazing. You can buy here in Hong Kong, you can buy a beautiful 32-inch monitor for your computer and stuff for under $500. In some places it's even under $400. But it's really amazing how the prices have come down quite a bit. So we'll see if that's the case. Someone asked a question about the rotary phones. Most of you people don't even know what it is. It's probably in a museum, but we were at one of our friends' homes in Tucson last week to say we watch each other while we leave town. So we went over to tell him we were leaving, and he actually has rotary phones. He has one in his den and one in his living room, and they are literally rotary phones that you have to put your finger in the little hole and turn it around. And he says he gets, he says it works great, and he really likes it. And he's 90 years old, so how are you going to change somebody like that? I would think he'd maybe go to a touch-tone phone, but he's actually still using rotary phones, and they're working great. So what are you going to do? I guess you have to make it work with what you've got. That's the bottom line. Okay, we talked about the gold and the silver. We're going to be heading up to the last part of the break here. I want to cover the Treasury bonds and then also the euro before we get off the air, because I think it's going to be real interesting here about the U.S. dollar. Because if these markets really go ballistic, it's going to have to take a attack on the U.S. dollar to make the markets, in fact, is something they could do. We got the Dow up 20, NASDAQ up 4, S&P up 4.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I wanted to mention one other thing about the seminar that we had here in Hong Kong last night. We had several people come up, I think about 4 people, to ask me, and well, actually some of them told me and other people asked me about the charting package that TFNN has for finding Gartleys. It was really amazing. So, these folks were saying how much they enjoyed the package and the fact that it's really helped them a great deal. And the accuracy of how they picked them out was really quite amazing. So that made me feel really being 10,000 miles away, and that this is finally, getting into other parts of Asia. But the package is very, very good. It does. David and Tom did a fantastic job with it, and it picks up the Gartley patterns very, very nicely. When it's looking at 5,000 or more issues every day, there's no way that anyone can, follow those by hand. So the computer certainly helps pinpoint them. But the way they programmed it is that the pattern really fits nicely with the symmetry that we like to see, with the market. So that's what we're hoping, that the charting package will keep going well. Now, the last chart that I put in here today is the Treasury notes overlaid over the Treasury bonds to show you that the Treasury bonds have come down to a double bottom from our September low. We've actually taken that out by just a little bit. In other words, long-term rates went below the September, they went above the September rate. However, the Treasury notes have only made a 786 retracement. Well, folks, this is indicative of a major bottom. So I am thinking that we're probably, unless Treasury notes literally give up and fall out of bed and go below 123, this is a chance for the market to have a pretty substantial rally that might last 7 or 8 weeks. Now, it has nothing to do with the stock market, folks, because these bonds have been going down for a year and a half, ever since we made the big butterfly pattern, back in 2012. And so it's been a, big move to the downside. So this tells us that we're still in a very bad bear market, but this could be one of the bigger rallies that we might be looking at here in the Treasury bond and Treasury note markets, where rates actually go down for a few months to help alleviate some of this oversold condition that we have in the interest rates market. Remember, the Fed does not, they set short-term rates, of course, with their Fed funds rate and things like that, but they do not control long-term interest rates. That's controlled by the market and the other people in the market. That's including Japan and China and Germany, France, everybody else. That's what we're looking at. Speaking of those markets, they've made some type of a major top, in my opinion, and I'm particularly watching Germany because the bounce that we've had on Friday and today has been rather anemic, which is quite surprising because it's the largest economy in the European Union and the one with the least problems. At least that's what they're telling us. If you believe any of those things, and I'm of the prediction that you probably should be skeptical of just about everything. But remember, the paranoid person only has to be right once, and then it's all over, because then they understand where they're coming from. So these are the things that we're looking at this week. So if you get a chance to take a look at the newsletter, it's got all of these charts and many more in it. That shows the copper chart, and the crude oil is actually held up above the the 786 retracement off the last low at $91 a barrel. We rallied quickly to $5 a barrel in just a matter of a day or two, and we come into some resistance around $98 per barrel, which means we're probably going to go to 103 once that's taken out. That's it, folks. Live every day in an attitude of gratitude, and may God bless. We got the Dow up 20, S&P up 5.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.